What's going on, guys? Welcome into another wheel video from the Bulls and the Bears. As usual, I'm going to go over my picks from last week, the profits from last week, how it all played out, and then, of course, the picks for next week and what strikes to play for that, what names to play. So we're just going to get right into it. We're going to first go over last week, so throw on the graphic as usual. I picked three names. One was Khols, 36.50 strike. That was a nice one. Hormel Foods, HRL, at a $47 strike is what I picked out. That was an earnings play. That was a riskier play. I definitely laid out a disclaimer for that one. And then the Gap GPS at $9.50 strike for the week. So those are the three call-outs I had last week. And those are the three that I played. Actually, I'm sorry. I did not play the Gap. I did not play that one. I couldn't get good premium for it. I didn't really feel the best about it, so I ignored the Gap. I did Khols, I did Hormel Foods. So we'll just go over Khols quickly because this was an easy one. It stayed above the strike. I have it all laid out here. The horizontal line was the strike that I sold, the 36.50 strike, and I needed it to stay above that by the vertical line, which is what happened. I mean, you can just see it dipped a little bit, came back up, pretty sideways for the week, and definitely stayed well above the 36.50 strike, and it was easy. I sold it for $45, and then I closed it for $4. So that was a $41 profit there on Khols. I could have wrote it out to the end of the week, but once I capture that much of the premium, probably like 90+%, I'm just going to close it for the $4 and profit 41. So not bad there. So quickly, the Gap, although I didn't play it, it worked out. You can see that here perfectly, stayed above the level, went sideways, and that was it. That was pretty much it. Didn't do much, and it stayed well above the 950 strike. So if you played that, it would have worked. I just didn't play it. But it was a good call out nonetheless. Now, Hormel Foods is one we're going to need to talk about. Because you can already see, this one did not work. I sold the 47 strike, which is the horizontal line you see. And I also sold a 46 strike. When I saw that it was coming down, I decided to sell another put at a $46 strike, bring in some more premium, and if I get a sign on both of them, it would lower my average a bit. On Friday, so I sold the $46 strike on Wednesday. Tuesday was the first day of the week. I sold the 47 strike. That's the horizontal line you see here. The next day on Wednesday, I sold another one at a $46 strike. That would be about right here. And so I had earnings on Thursday. It was actually decent earnings. It beat revenue, earnings per share, and was sideways by the open pretty much. But then it sold off hard intraday, so that sucked. But on Friday, we had a strong push on Friday up to 46.50, and my 46 strike that I sold the day after on Wednesday, I was actually able to close that for a profit. I knew the picture looked bleak, and I wanted to avoid getting a sign twice given the current picture and given the move on Friday morning. I was like, you know what, I'm just going to close my $46 strike for a $15 profit and just hold on to the $47 strike. So I sold the 46 for $40, closed it for $25. That was a $15 profit. But I held on to the $47 strike, and the week's over, obviously. I'm going to get assigned at $47. Now, I sold the $47 strike for $50. $50. So when you factor in the premium received, you can adjust your cost basis as a result. So, yes, I got assigned at 47, which means I'm going to have 100 shares at $47 per share. But when you factor in the $50 received from the put premium, it adjusts the cost basis by 50 cents because I sold the contract for 50 cents, which in options lingo means you get $50. But when you talk about adjusting cost basis, it really adjusts it by that exact premium amount of 50 cents. So really, my cost basis is going to be $46.50 come Monday morning when I get the shares. So that's good. That's good. We closed at 45, just above 45, so we're about $1.50 away from my average. Definitely sucks to break this level of support. That's what I was trying to play. And, there is potential for some more downside given this run up over here back in December. A straight move up means it can be a straight move down when it gets back into the zone. So not looking great there, but daily chart, we are oversold. Its earnings wasn't even that bad either. So I already go into this knowing that I'm going to be okay holding this company. So it's all cash. It's not margin, so I'm not going to be charged interest. I'm going to be paid dividends, and I'm going to be selling covered calls. So I'm just going to play the wheel. This isn't bad news. This is just plan B with the wheel. By the way, I actually posted a video earlier today of the wheel strategy, what it is, how it works, and how I use it. So you can check that out. But this is plan B. We have the shares. Now we're just going to manage the position. Selling covered calls, collecting dividends if we hold it long enough, and that's it. Wait for this thing to come back up. I like the company. I like the financials. I like the industry. It's just going to be a matter of time. So that's the plan next week, sell covered calls. But yeah, this one did not work out. We got assigned, and now we're going to have to go to plan B. And that's the end of it. So last week, the profits were $15 for this Hormel Foods and then a $41 on Khols. So that was $56 realized profits. I was hoping to realize this $47 strike put for another $50, getting me over $100 on the week, but I didn't because I got assigned instead. So instead of realizing the profits from the premium, I'm just going to I'll allocate it to the cost basis of the position, if that makes sense. So that's all set. That was last week, and we're going to get into this week now. So I have 4 names this week, and I'm going to lead off with the one I'm not too crazy about, but I will include it anyway. Up to you guys how you want to play it. I probably won't, honestly, but I'll keep it in mind. This is International Paper Company. IP is a ticker symbol. Looking at the $46 strike. No earnings, by the way, in any of these names. I don't have to worry about earnings risk this week. The $46 strike, it's all laid out. Horizontal line is the level we need it to stay above, and the vertical line is the expiration date that we needed to get to while staying above the level. So it's at $47.09, so it's about $1 away. For the premium at $46, right now you're looking at about $30, so that meets my minimum. And obviously there's some level of support. I mean, every time IP, International Paper, got down here, it always bounced up. It only closed below this once in the past 2 months, and the very next day it got right back above 46 and then moved up well above it. So definitely some support, but there's no real moving average support. I mean, it's at the 50 daily moving average right here. We'll see if that does anything, but it's not really oversold. It is a little beaten down, 4 straight red days, but aside from this horizontal level of support, which is pretty significant, there's really not much else going for us. No moving average support, no RSI support. So that's why it's my least favorite, but it's still a candidate. That's why I'm showing it. It's legitimate, and I think you could play it, but I probably won't. Next, moving on to CAH, that's Cardinal Health, Inc. They're in the healthcare industry, both pharmaceuticals and medical industries, and this is looking a bit better than the last one. Again, I'm looking at the 42.50 strike, which I have all laid out here, as always. Clear support in this region. Back in March was the last time we were down here. Clear support. We were going sideways. We ripped up. So that's going for us. And it was even resistance back here in January and way back here in September. So prior resistance becomes support. And we see that playing out here, and now we're finally getting back to it. Getting beaten down, 5 straight red days. RSI is just about oversold. If we get down to 52.50, we will certainly be oversold. And what you might be able to see right here is the daily 200 moving average at 52.36, so just below the strike. Daily 200 moving average, and by the time the week plays out, this moving average will probably move up a little bit closer to 52.50 with the strike that we're playing. So we have horizontal support, we have the RSI being oversold, and we have the daily 200 moving average all right here. So I think this is a very safe level to play on CAH, the 52.50 strike. I keep messing that up. And as of right now, you can get about $50 for the contract. Even if on Monday morning the theta decay ruins that a little bit, or maybe during the gap kind of ruins it too, I'm sure it'll still be well over $25, which is my minimum. So I'll most likely be playing this one at a 52.50 strike. Next up, we have Camping World. What? Camping World? Yes, Camping World. CWH is the name. You can go to the profile on Webull. Camping World Holdings is a retailer of recreational vehicle, RV, and related products and services. Companies principally engage in offering recreational vehicles for sale, RV and camping gear, RV maintenance and repair, other outdoor and activity support, sports products, protection plans, products and resources, blah, blah, blah. So that's Camping World for you. I'm looking at a $24.50 strike, which right now would yield about $40 premium. So that's good. This thing has been getting crushed, not gonna lie, but we're nearing support. The strike is at support. You can already see it bounced off of this area right here back in April. I zoom out and scroll back. Again, we got below $24.50 back here in November 2020. Came right back up, never looked back. Definitely support way over here after being resistant in 2020. So clear level of support. Now, this thing was down to $3 or even $15 before the pandemic, so that's something to keep in mind, that there is some downside potential. But it's been holding above this area for 2 years now. And again, everything lining up for it to be more support at $24.50. Look at the weekly chart. There's a better picture of it there. So in the 200 moving average on the weekly chart, right now is at $24.49. Or you could say $24.50. So we have the 200 moving average on the weekly chart as support for us as well, to hold this thing up. 200 moving average is the king moving average, and on the weekly chart, that's even more significant than on the daily chart. The further out you go, the more significant support moving averages really hold. So the 200 on the weekly chart being right there. If I move this line, you'll see it. There's the purple line, the 200 moving average. So that's in our favor. It's definitely significant support, and it might even be oversold by the time it gets down there, because the RSI right now on the daily chart is at 41. If this moves down a whole nother dollar plus, I would say, and during this week, after being down 5 straight days in a row, I think the RSI would be in our favor as well. So that's a decent one too. I like that one. $24.50 strike. That's going to yield about $40. Liking that one. And lastly, my favorite one. It's a fan favorite. It's been around on every video, I think. It's Khols again. What the hell? Khols. It just won't go away. I mean, it's a perfect candidate so far. It's just, I gotta keep playing it. It's just offering great premiums at great levels. I kind of can't believe how good the premiums are still. So let me just move this. This is going to be the finish line for next week. I played 36.50 last week, but right now, given the premiums, you could play 36. The 36 strike is yielding $50. Again, subject to change when Monday comes, because there's theta, there's a gap you got to factor in. So premiums will be different, but it's going to be above the minimum for sure. If it's $50 now, there's no way it's going to drop 50% on Monday. You could even go as far out as 35. $35 strike, yielding $35 right now. That's actually what I did on Friday. Friday afternoon, I knew I was going to play this thing next week. Premiums were still very good. It was moving sideways, so the same levels that I liked were still in play. And I said, why not just sell a put on Friday afternoon, like literally close to close, instead of waiting till Monday and waiting and like having the gap and theta ruin the premiums. Let me just get a jump start on it now while there's more time on the contract, more extrinsic value, get more premium. I'm just going to sell a $35 strike right now, Friday afternoon, for next week instead of waiting till Monday. And I actually tweeted about that, so link in the description to my Twitter page. All of my plays, whether I discussed it on here or not, like any pivots to it, whatever my entries and exits are, whatever I'm playing, whatever I'm not playing, I tweet about that. Every time I get into a trade, I'll tweet it out, say, hey, I'm playing this strike. Maybe I can't get into this one, but I'm playing this one. Here's the premium I received. Or, hey, I'm closing this strike. I'm closing this position because, the premiums dropped a lot. I'm just going to close it for a few dollars, whatever it is. So if you're interested in following along with me, I'd give me a follow on Twitter, because that's where you're going to see my live actual trades, because it doesn't always work out how I plan it in the weekend video. Premiums might change, so I might not play one, or I might find a new opportunity. I might do another contract or a different strike on one. So a lot can change. That's why I like to have a platform to announce these changes. So Twitter's the one, link in the description. So Khols, he goes far out as 35, 36 looks pretty solid. And look, I mean, last week I played the 3650. So I'm talking we can go further away. We can sell the 36. So not 3650, but the 36 level. Bring that down to 36, get further away from the current price. And on top of that, last week I played the 3650 strike when the price was closer to that strike than it is now. So not only can I go further away and go further out with a 36 strike, but the current price is actually higher than it was at the beginning of last week. So there's even more distance in between the current price and the strike we're playing, but yet we're still getting solid premium. That's the 36 strike. Like I said, I'm already playing one at 35, which is even further away, down here. And come Monday, I don't know what the premiums are going to be. Maybe 35 is still playable. It's up to you. Me, I want to make sure I get at least like $25 premium. Not sure if it'll be like that, but it could. In which case, 35, even further away, even better. At the almost near the very bottom of this pivot down here. I like Khols long term. It sounds like places like Kohl's, TJ Maxx, Macy's, your kind of discount retailers, they're going to be the ones benefiting from this inflationary time we're living in, where people have less discretionary income to spend on these items. So they're not going to go to your specialty stores. They're going to go to the discount stores like Khol. So I think this could be a company that could benefit in 6 to 12 months. So, and it's already beaten down pretty good. It just had earnings, so there's no risk there. I just don't see it selling off even more. Maybe it could, but it's a pretty far away distance. We're talking over 10% in 1 week with no earnings catalyst, so that's pretty irrational. I think these are very safe levels, and you get very good premium for it. I don't know why the premiums are so high on Khols, but I'm going to take advantage of it as long as I can. So 35, 36 is the strike I'm playing. I'm already in 35. I might even throw on a 36 strike on Monday because I just think it's such a great opportunity. And why not pile in our cash into great opportunities than spreading it out to lesser opportunities? You know what I mean? So those are my plays. Definitely like Khols. Camping World's solid. Cardinal Health is solid, CAH. And then International Paper can work, but I'm not really too high on it. I'm probably not even going to play it, honestly. If I double down on Khols and then play Camping World and Cardinal Health, then I'm not even going to bother with International Paper. So those are the plays. So here's Khols. Let's go to Cardinal Health quick. Playing the 5250 strike. You got the 200 moving averages support, horizontal support. RSI is going to be oversold. Great opportunity there. Camping World, definitely some significant support. RSI, not really helping us too much. If it gets down there, maybe it'll be oversold, but not really too reliant on that. But the weekly chart, you can clearly see major support, and the 200 moving average on the weekly chart is right there to help us. International Paper, like I was saying, not my favorite, but it's legitimate. It has clear horizontal support. This is the weekly chart. If I go to the daily chart, you can see it too. So that can be pretty safe, but I'm probably not playing it like I said. So those are the names. 4 names. Let's get it. Follow me on Twitter to see exactly what I do. I'm already in on Khols, and I'll let you know Monday what else I get into. Probably another one on Khols, and then Camping World and Cardinal Health as well. So that's it. Thanks for watching. Stay tuned next week. If you liked the video, leave a like, subscribe for more content. Let me know if any of you guys are even doing the wheel, whether you're doing your own thing or whether you're following along with me. I'm very interested to see, my fan base doing the wheel strategy along with me. If you're just kind of spectating and want to just see how I end up doing, that's fine with me too. I definitely want to prove my worth to you guys before I can expect anyone to really follow along with me. So I understand that completely. So I'm hoping that, 6 months down the road, I'm pretty consistent with this. I can prove that to you guys by making videos every week. And maybe we can build a stronger following with the wheel strategy, because it can work. It's not as glamorous as day trading, for sure, but it can get the job done. Slow and steady wins the race. If I have a day job, so I don't need to really day trade, I just like some additional income from the market. I think this is a safe way to do it, safe and consistent, and it kind of takes all those, wild emotions out of it that you would have with day trading. So just a different approach to the market. I'd be curious to see if you guys are doing anything similar. But until next time, that's going to do it. So enjoy the weekend, enjoy the week. Follow me on Twitter, subscribe for more content, like the video, and I'll see you all next time.